until they are actually, the central banks and governments are actually ready to reset the currency, they will suppress it because, again, a rising gold price is an indication of a failing currency.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Lynette Zang. She's the head trader at ITM Trading. I last spoke with her back in July of last year, so it's been a while. Better late than never, though. And ITM, of course, specialize in gold and silver strategies for long-term wealth. And yes, I was actually chatting with a viewer earlier today, and I said, I'm going to have Lynette Zang on, and he said, my values tend to align with her, and he said she believes in gardening, moderation, and sustainability. I thought that was quite a good comment from the viewer. So Lynette,
and that's true too. So
yeah, so it's great to have you on again, and yeah, how are you?
well, I'm excellent and I'm very happy to be here, Mario. Thank you for having me back.
Oh, you're welcome. So what we're going to do today, I have a few questions from myself for you. And earlier today, when I made my daily video, I asked the viewers what they wanted to ask you. So I couldn't take all the questions, but I've taken about a dozen of them, and we're going to go through that, through those questions. So the first question I have pertains to my numismatic coins, because aside from bullion, I have been buying numismatic coins for many years, and I do like numismatic coins. I do know a little bit about the how it works, how to rate the coins, about the rarity, but I also buy them because I like them a lot of times. And my question to you is, how would numismatic coins, gold and silver, do in a currency collapse? Do you think the premiums to spot would stay similar to where they are prior to the collapse, or would they also increase?
Right. I think there are a number of different factors that would have an influence on the premiums. But since we're already near premium lows inside of this cycle, I would anticipate that the premiums would expand and expand pretty dramatically, particularly if the government made the choice to do an overt gold confiscation. They've been doing covert gold confiscation forever, right? But if they actually went overt, now you have the only kind of gold that you can actually legally hold and use through this trend cycle. I would imagine that that not only in a reset, obviously spot is going to be more reflective of gold's fundamental value, but I would anticipate that the premiums that you would have to pay to get your hands on it, since it makes up less than 2% of the total gold market, would explode, maybe go back to the 89 highs, maybe even go much further than that.
Yeah, I've been accumulating quite a few like silver coins over the last 12 months from all different countries. And the reason why I like numismatics as well is that you can learn so much about the history of the country. You can look at how the governments have debased the coins as well over time. And you find that a lot of times it matches wars and crises. So, for example, I've got here a coin from the Empire of Brazil. Not many people know that Brazil was a monarchy until 1889, and it's an 1888. It's called 2,000 reais. So it's about like the weight of a silver dollar. It's really nice. And if you go, and I've got one from 1853, and which is the same weight and size. So in Brazil, up until 1889, from like 18 22 when it became independent. We had sound money, we had silver, and after it became a republic, a lot of the silver was taken out. So I think it's not just for the value in collecting, you learn a lot about history.
Too true. And then, really for me, my Uncle Al was a major antique dealer back east. And, 1965, he showed me 2 floor safes that were packed with pre-1933 gold coins. Well, in 1965, it was illegal to own more than, or 1964 was one of those years. I was 10, so 1964. But it was illegal to hold more than 5 ounces of gold, other than the way that he was holding it. And I didn't realize until many, many years later, but what a huge impact that had on me. And I think the reason why I said 1965 is because they already knew that that there was already a run on the U.S. dollar by foreign governments sending in their dollars in exchange for gold. And that's when in 65 is when they actually re-legalized gold certificates. Now, you couldn't convert the certificates into the physical gold at that point because it was still illegal to hold it in any other form than the way my uncle was holding it. But, how many people knew about that one? And, you were buying it on those certificates at $35 an ounce. And he was probably buying those coins somewhere near that as well. Maybe a little bit higher because there were 2 different gold markets. And so there was a lot going on in the gold market in the 60s. But, you talk about history. And if you really look at it, you can see, because history is repeating itself, who gets the best benefit from all of those changes that the governments do and the central banks do. It's pretty interesting.
Yeah, I read about John Exeter. I don't know if you heard of John Exeter. He was a New York Fed banker. He retired in the early 70s. And he wrote that he used to buy gold sovereigns back in the 60s because they were exempt as well. So,
thanks to President Kennedy.
Yeah, that's right.
John Exeter created the Exeter Pyramid, showing gold as the safest asset and then going up the risk spectrum as well. So we could make that available, or you could make that available to your viewers. I think it's really interesting to look at the Exeter Pyramid, especially since you brought John up.
Yeah, I've been following John Exeter. Unfortunately, he died a few years ago. But yeah, I've spoken quite a few times about the inverted pyramid, and he thinks that when the system, the fiat currency system, implodes, he calls it "I owe you nothings." Basically, all the liquidity will flow into gold and silver at the bottom of the pyramid. He didn't add silver to it, but I would add silver as well.
I would too. I agree with you. So that goes back to the premium questions too, right? Because there's a finite amount of physical gold and physical silver. There's an unlimited amount of the contracts, but there's a finite amount when you get to the physical form.
That's right, and we're seeing that especially since last year, and it hasn't stopped. The premiums are still really high. So with that, can we move to the question of the monetary reset? And my question to you about the currency reset is whether you think China and Russia and the EU will have a big say in setting up a new monetary system if one is set up?
I think that absolutely. I think China in particular will have a huge say, or is having a huge say. I mean, they were actually the ones that brought up the SDR back in 2009 that caught my attention, because what is going to be the new currency? And that was the question because the system really died in 2008. So yes, 100%. And we've also had the IMF say that that they're going to put their headquarters, which is now in Washington D.C., but in China. So yes, I think I think the U.S. will have a level of say in it as well, but I think China, above all else, will have the most say, and I think they're showing the world how to control their citizens and their population. I hate to say that, but it's true.
And do you think they'll have to use gold to back a new world currency?
Initially, now I'm not saying 100%, but the fiat money system is a Ponzi scheme. And so you need confidence. And by the time they reset the global currencies, the confidence in the powers that be and in, the central banks and the governments, I mean, we've watched it wane over many years. It'll be gone. And so if they want the population to use the money, which of course they do, it's how they'll stay in power, then yes, their history tells us that and the IMF has also discussed it, there will be a component of gold in the new currency to stabilize it. And then over time, I think they'll take it out again because that's also what history shows. But yes, I definitely do think that gold will be a component of the new money for a while anyway.
Good. Another question, and something that we haven't heard that much recently, but you've covered it quite a bit. I've covered it as well. It's about the LIBOR phase out and the repercussions it could have on the whole system and how it's going.
Well, I mean, they ran that test in October, and then they postponed the U.S. dollar LIBORs until 2023. Now, they are pushing and creating the SOFR to take over, and they're putting the fallback languages in all of the contracts so that they can automatically shift. But there's still too many contracts that are being created that have LIBOR in the fallback language. And this is just a huge experiment. And who really knows? I mean, the last time I checked, it was 640 trillion in notional value of those derivative contracts, which means, who knows what the real value is at risk. We're looking at the quadrillions. But yeah, do I think the system can withstand that? Well, time's going to tell us, but apparently they couldn't when they were originally scheduled, and they had from 2012 until 2021 to make those adjustments and those shifts, and they were unable to do it. And even during the beginning of the pandemic, as Fed Chair Powell was pushing out all these loan programs and really had the opportunity, I felt, at that time to really build out their new interest rate program, he still used the LIBOR. Even he went back to using the LIBOR in the contracts. So there must have been something in there that meant that SOFR, the U.S. contracts in England, you have a different one that is much further along. But, there had to have been something in there that prevented him from just linking those to SOFR. Yeah, I think it's a big fat experiment that is, in my opinion, most likely to go horribly, horribly wrong.
Yes, and a lot of people don't realize that LIBOR, reference doesn't just create derivatives products, but also a lot of the mortgages, even in the U.S., are based on LIBOR, and LIBOR is
cards, student loans, any debt.
Yeah, and I think it was what's his name, Andrew Bailey. He's now the governor of the Bank of England, but he was in the States as the head of the FCA which is the equivalent of the SEC in the UK, back in 2017, talking to bankers on Wall Street saying, you guys need to change this. And he said it could be a problem. A lot of Americans don't realize, even though it's the London interbank offered rate, like you said, a lot of loans, mortgages, credit cards are all based off LIBOR. And I think the reason they haven't been able to do the transition is that the people who trade these things, they're used to using LIBOR, and old habits die hard.
I absolutely agree with that. And in a lot of these cases, I mean, in the contracts that impact you and me and normal people, well, frankly, that fallback language and their ability to change things without our permission has been in there forever. So it's not us little guys, but we will be feeling the ramifications of it. And, you know, whether or not this goes into that, you know, we've got the global bail-in laws. And recently in the US, because we're in an ample reserve regime, which basically means the Fed will just keep printing money, so the banks don't have to hold any reserves, releasing all of that funding for trading. They changed how savings accounts were classified to be demand deposit accounts. And I'm really wondering, there's been a lot of rule changing with high interest rate loans and what the banks can do, partnering with non-bank loan issuers like fintech companies, payday lenders, those kinds of things. And, you know, I mean, they've really been expanding the risk base in the banking system that you and I are supposed to think of as so sound and solid because of all of the garbage tests that they give them. And yet they've been removing investor protections pretty consistently since they put them in place in 2010. But they're getting even more and more aggressive, and these changes are happening more and more quickly. And, you know, I think it's a big deal. I think it's a big deal that they, just like when they reclassified deposits, so you put your money into a bank account that your perception is that's your money, but then it gets swept underneath. They did that in 95 to give the banks more money to really get this trading revenue off the ground. And, you know, I just see more and more and more risk being piled on, but it's insured. Well, but they don't have any money in the insurance fund. But it's insured. Yeah, okay. As long as not all the banks go out at once. But this would definitely, I think, easily cause the whole financial system to explode at one time. You ain't getting, you know, I mean, whatever you've got in the banks, it's staying there. You're not getting it out unless you get it out before that happens.
Do you remember a few years ago, I think it was 2014 or 15, under the Obama administration, there's a National Authorization Act that was passed around Christmas time. And I think Citibank put in there something really sneakily that basically covers derivative losses for the big banks with FDIC funds. I thought that was quite outrageous, because FDIC already doesn't have enough funds to cover deposits. Now they're supposed to, the taxpayer will be on the hook for derivatives.
Depositors will be on the hook. Taxpayers will be on the hook. But, you know, I mean, we're going into a hyperinflationary environment because everybody's already on the hook. This isn't something, you know, unfortunately, it's not something new. In that same act, basically it said that the government can come in and commandeer and confiscate everything. So, like, I'm growing food. If they want my food, they can just come in and they can take my food. If they want my vehicles, they can take everything. It gives them the right to do really everything or anything.
Yeah, that's why nothing's really safe. We can just do our best to protect ourselves and prepare, I guess.
And I think that's really also the importance of community, because I'm just one little person. So I can, I can do my best to be as prepared as possible. But if we come together in community, we're going to have more choices than as just one little person. That's why doing the work that you and I do and coming together and having these conversations and people then sharing this information, I mean, it's critically important. It's our only hope, really, that people come together, share this information so that we get to say no, because there's more of us than there are of them. No, the answer is no, you can't do that. No, we won't let you. Although I'm not advocating violence at all.
So before we go into the viewers' questions, the last question I have is about Basel III. That's coming up a little more. People are talking and asking questions. What's your view on the June 28th date and gold and Basel III?
Well, gold is a tier 1 asset, but I do think that a lot of things, if it's detrimental to what's going on right now, I think we could see a postponement of it. We're getting pretty close. But I know somebody said, well, then they're going to back the system with gold, which of course they can't. We've got to go into hyperinflation to burn off all of this debt. So I think the rules that were convenient and they've been in place and they will go into place. The rules that are inconvenient will be postponed or negated. They're not ready for the transition yet.
Yeah, they'll just delay it, like they've delayed the LIBOR transition. They just make up the rules as they go along. So to the viewers' questions, and to let you know, the viewers, I couldn't take all the questions because there's a time limit, so I took 12. And just because your question might not be there doesn't mean that I don't like you or that the question wasn't any good. Just had to pick some. So Paolo Asiano asks, how safe is it to allocate precious metals with a bullion dealer for people who are nomads? I think Paolo travels around the world. He's doesn't have a fixed base.
Well, I think that's challenging because in reality, if you don't hold it, you don't own it. So possession is 9/10 of the law. Having said that, I would probably personally, I mean, it needs to be a dealer that you 100% can trust. I mean, I think that's critical even when you're buying your metals. You need to know that they're legit, they've been around, they're going to be around. But if there is an overt confiscation and they're holding bullion, I don't see them saying, oh no, this belongs to our client. So I would probably feel a little safer having it in a private vault that I have a relationship with, because it's not as likely to happen. You'll have a little bit more control. But you guys all know, I mean, if you don't hold it, you don't own it. And so... And by the way, one thing I always do that I always recommend, especially if you're a nomad and you're traveling, that you can wear under your clothing gold and silver necklaces and chains, and that's a way to always have money. Or, I had a charm bracelet made with sovereigns, or no, roosters. I think I did the rooster. So that if I am forced to leave quickly, I can take my money with me, but it looks like a piece of jewelry.
When I went to Florence in 2019 with my wife, I took a few gold sovereigns in my pocket, and they look like copper coins a little bit. They're not very yellow. And
right.
I put it together with my change, and at the airport, the security, when you have to take things out of your pocket, I just put them with all the other coins, and no one knows that it's gold. So I would say sovereigns are a good way to travel with gold as well, because most people don't even know it's a gold coin.
Right. I think that's a great idea.
Second question from Hybrid Parts. When do you expect prices of everyday goods to go exponential?
Any moment now. Any moment now. I mean, that we are being bombarded with shortages all over the world for everything. I think we've been talking about the pond, and the chlorine now is shortage. So, and California's in drought. They provide a lot of food. So I think it really is about the printing presses. But yeah, I mean, if you're just paying attention to the cost of your daily goods and services, we're not that far from that. And for the central bank's arrogance to say that, or the Fed's arrogance to say that this is transitory, it does not sound transitory to me. Business owners, companies that are dealing with pretty much everything are saying this does not look or sound transitory to them. So, really, I think the exponential part has already begun. What hasn't yet begun, though, is, or at least I think I looked at it last week, was the monetary velocity that had started to raise a little bit has fallen back, even with all the stimulus that's out there. And people are shopping, they're tired, they're getting this extra money, and yet you still have all those people that are unemployed, and they're now starting to get that monthly, kind of looks like UBI child tax care credit that's due to go out in July. So, people are out there, they're spending, they're tired of it if they have extra money. I think the pricing has already begun to go exponential.
Third question from Logan Pont. He wants to know, Lynette, how many silver ounces need to be ordered and delivered to move the market 1%? I guess he means the paper market.
I think anybody can take a look and see. If you're talking about the physical markets, they can create as much paper as they want to. So for gold to be here, under $1,900 an ounce, and silver to be under $30 an ounce, with all of the buying that's been happening, even the CFTC came out, and the physical market is not really going to move the spot markets that you see, because they will just continuously sell more and more contracts that do not have the ability to deliver the underlying silver. Having said that, because I know a lot of people go, oh no, but the reality is these, both silver and gold, are primary and secondary currency metals. And with the currency clearly dying, a rising gold price is an indication of a failing currency, so it must be suppressed until enough confidence is lost that central banks have to lop off zeros, goes to the exponential piece, lop off zeros, because they do it against gold and silver as well, but gold is the primary currency metal. And even at that, on average, they do that 3 times, because I guess people are so gullible that, okay, they say this is going to make a difference, and so they go along with it. It doesn't make a difference, and so they do it on average 3 times. I can't tell you how many times it's going to happen this time, if they can maintain the confidence. But it's not the physical market, it's the paper market, and then ultimately it's the central bankers that will move all of these markets, and you'll see both gold and silver near their fundamental value. But the paper markets are dying, so it has to be when they're...
Yeah, in Brazil, I remember they lopped off zeros from the currency. See 1,000, then they just stamped here 1. And they did this a few times, and it, like you said, it doesn't work. And then they have to just reset it properly,
right. And that's what you're holding: physical gold, physical silver in your possession, and also the food, water, energy, security, community, and shelter. Because these are all the things that we need to maintain a reasonable standard of living. Because even in Brazil, even in Venezuela, where you might have 80 to 90%, globally on average, 80% of the population ends up in abject poverty. I mean, we're talking middle class people to abject poverty, but I didn't say 100%. So we want to be in that 10 or 20% that has the ability to maintain their standard of living at a reasonable level, and dare I say it, even expand your wealth base, because there's lots of opportunities in what lies ahead for those that are holding their purchasing power.
So the fourth question, I guess, is a little bit related to the previous one. It's from Grant Harding, and he asks, how will the gold and silver manipulation cartel ever be vanquished?
That's how. You've got to understand that gold and silver cartel are working for the central banks and also for themselves because of all of that trading revenue. So once they need that to be released, that's how they get vanquished, because that's the way they reset a currency. It's not like you've got a bunch of different choices. Oh, well, we can do it against this or this or this or this. No. They have to do it against gold, which is all intrinsic value, because it's used across the entire global economy. So it has the broadest base of functionality, and it has the broadest base of buyer. So I'm not counting on Wall Street to tell me how much gold and silver is worth, because that's just a fool's game, and I used to be a stockbroker. I get it. So I do my own calculations when I need to know.
Charles Sherrard III asks, what do you think silver will be valued relative to gold when we go back on a gold standard, if we go back on a gold standard?
Well, I do think history tells us that going back to a degree on the gold standard is the most likely outcome. And then again, they'll whittle it away. So do I think we're going to go back to the 15-to-1, the gold-silver ratio, which is, I think, what he's really asking? I don't know. But what I can tell you from history is that we will see that ratio get more and more narrow. Once we're dead in the hyperinflation, then you're going to see that grow a little bit more, simply because gold is the primary currency metal. I personally I have a lot of silver. I like it for my barterable portfolio. I don't really hold that so much for my wealth preservation portfolio. I hold it for my ability to barter. If I need to put in a tank of gas, or I need to, buy some strawberries, which I shouldn't because I have gardens, but, for my day-to-day. So I think that will narrow, but when we're in the thick of it, I think it'll grow further apart again, simply because that's what history tells us. So I don't know that we'll get to one to one. But the other part of it is that usually when somebody asks that question, they're thinking about it in terms of dollars or any other fiat currency. And when that occurs, everybody's going to be well aware of what's happening to the currency. You're not going to convert it into that currency just because you're going to know it has no value. So that's why, for me, it's about barterability and making sure that I can convert it into smaller items that I would not use my gold for. So gas, food, those kinds of things.
Great. Question 6, Davin Murphy. Does digital dollar give the Fed more time before they are forced to reset?
Yes, exactly. The digital dollar will not be the reset, but people will think that, oh, okay, now we've got the new currency, right now I feel like we're in the roaring 20s again, and we're in the 20s, and usually before that major currency, just to get everybody really feeling good and not paying attention, we see an economic boom, which we're seeing right now. I'm not saying anything is fixed. It's all done just on more and more debt, devaluation, depreciation. Yeah, I think, I'm sorry, what was the question? I think I went off on a tangent. Sorry about that.
Does digital dollar give the Fed more
Oh.
time before they are forced to reset?
So the answer is yes. Yes, I believe it does. It's not going to
Great.
fix the problem.
Question 7, Edward McLaughlin. Are rare less than 100,000 mintage coins a good long-term hold investment?
I believe they are, because they are, basically, when you're looking at dynastic wealth, which is wealth that's lasted in families for at least 300 years. You're in England, so this is a perfect example, Queen Elizabeth and the Queen's family. But dynastic wealth has 3 legs: real estate, really rare collectibles, and gold. You can do all 3 with the gold. So I do have what I consider dynastic wealth coins with very, very low mintages and very, very low populations that I don't intend to convert into. I could, but my intention is not to convert them into income producing assets, but rather to pass them down from generation to generation to generation. While I have other gold that it is absolutely my intention to convert into other income producing assets, which right now they're up here, but this will flip flop and gold will go up there. Those other income producing assets will go down here. Then I will capture some of those gains and convert them into those income producing assets. But I 100% have a nice chunk of my portfolio in the collectible gold coins that really are, my intention is to pass them down and pass them down so that my family, long after I'm gone, still has wealth and therefore choice, because that's a lot of what this is about, is retaining your choices.
That's great. Yeah, I agree with you. And also, like in Italy, for example, there are families there that do the same strategy, and they add on also the vineyards in Italy,
Right.
which is quite interesting. Question 8 from John Lynn. What would happen to silver if the government designated it a strategic metal?
So I think you're referring to what would happen if they actually confiscated silver, because if they designate it as a strategic metal, maybe it's because they want to confiscate it. In which case, then I'd say you need to have the collectible metal as well, which I have a little bit. I don't really have a lot of that. For me, most of my silver is raw. But if they designated it thus and they chose then to confiscate it, well, what do you think would happen to it? It's not in the market. So that anything that is left in the market would have a lot more value to it.
I would say hide it as well really well.
Well, we always have to, comply with whatever the legal terms are. And, so we're going to say that for sure.
Okay.
We're going to be good citizens.
Question 9 from V. Bjorn Gritton. How quickly will bond yields rise relative to some inflationary readings? I think he's talking about here the real yields, if
Right.
Bond yields are going to keep up with the rise in CPI.
Well, I don't, since all of the central banks are really just making the commitment to buy as many bonds as they need to suppress the interest rates, when you do, and even at that, they have not been able to keep them as low as they have wanted to keep them. That's why you see the stock market acting really bipolar these days, because on the one hand, in theory, when inflation rises, then central banks increase the interest rates to suppress that inflation. But that is not what they're doing anymore. And they warned us about it when they went to that average 2%. So when you see a big spike in interest rates, and honestly, this is something that I've been questioning. Are the central banks losing control? Because the interest rates will, the market is bigger than the central bank's ability to buy the bonds, let's face it. Especially with all of these derivative products. They don't even have to buy the bonds. They just have to put out a couple of bucks and buy derivatives against interest rates or credit or what have you. So I think what we've been watching, actually I know, what we've been watching as witnessed by the Treasury VIX is the handing off of control of the bond market to the traders. And we recently went to a new level in there. So when you see a big spike in interest rates, it's because of the loss of confidence in the central bank's ability to control things. And that's already happening. We've been watching this question come up for a number of years now. So, big spike in interest rates, which I'm paying attention to as well. Yeah, they're between a rock and a hard place. If they raise interest rates, what's going to happen to the stock market, right? And the stock market is benefiting the few at the top, and it's also making like pension plans and different things look better than they really are. So, yeah, we're in a mess, and we're at the end.
Yeah, I think they're going to keep trying to keep interest rates suppressed, but all that's going to do, especially with CPI and measures of inflation going up, it's going to put a rocket up real goods, tangible assets, gold, and we're seeing that already, copper, lumber.
Yeah.
So, yeah.
Oil. It wasn't that long ago when we had, what was it, minus $48 a barrel or something like that. And now we're up at $65, $68 a barrel. The cost of everything is going up and probably exponential pretty quickly here. And that would also have a major impact on interest rates. But I agree with you, Mario. They'll just keep buying it because, they just keep printing money and creating more debt. But it'll only work until it doesn't. And with interest rates even up, 1.6, wherever they are right at the moment, it's kind of showing you that they're starting to lose control. And look at that Treasury VIX, which I think they have now taken away because we don't want to know what's going on in the Treasury market that's the foundation of the global markets. Oh, heck no. Let's not know what that is. Yeah.
Okay, question 10 from Somanath Yavagal. And he's asking you the question of what do you mean by the following quote? I think you made that quote. It says there is a wealth transfer that is taking place. And he says, in what ways is the wealth transfer happening?
Well, we can see it in a bunch of different ways, but inflation is an intentional wealth transfer because, we've seen it in income and wealth inequality. In the early 70s, the average CEO made 20 times more than the average worker. Now it's over 300 on average, 300 times or so the average worker. And that's thanks to inflation. And we know that back in the 70s, the average wage was $9,500, and a family of four could live on that with one wage earner. Today, you're getting stimulus checks. If you're making $150,000, you're getting stimulus checks. So that is how the wealth transfers on many, many levels, but also during a crisis. So if we think back to 2008, when most of the people that owned single-family home rentals were moms and pops, right? And a lot of people were sold the bill of goods, go in, buy the most, because I heard, Greenspan, say it myself. Go ahead and buy, use the variable rate debts, get the biggest house that you can. And what happened when that market crashed was then corporations started, like BlackRock, started to come in and buy up all those single family homes. And now, amongst all of the shortages, part of the reason why we have like real estate shortages is because of big corporate buyers that have pushed out the mom and pops, because mom and pops need to get paid every month. But with the rent and the mortgage moratoriums, it's a big problem. And they're not close enough to where they can get that relief like the big corporations are. So that's also, never let a good crisis go to waste. So in a crisis, there's a tremendous amount of wealth transfer. And then even on this little level, let's say you own a stock and it's at $100 a share, and then it starts to drop. Well, guess what? Whoever sold it to you at that $100 captured that wealth. You're still sitting in it as it's going down, and they're off doing something else with that money, probably buying gold and silver, real wealth. So there are a lot of different wealth transfer mechanisms. Right now, I think everybody can see that almost all asset classes, and especially those that have been targeted for reflation. You can search this stuff. They say it. The central banks say we've targeted these areas for reflation. Got to keep that air going into that balloon. Stocks, bonds, real estate. You've got the derivatives that are on top of that. And what is undervalued? Gold and silver are undervalued to their most important function, which is to hold your purchasing power even, because they don't want you in physical gold and silver. They want you in these fiat markets, because when these markets implode, who are you going to complain to? Who are you going to call? There's nobody.
Not the CFTC.
No, don't bother to call the CFTC. Or any of the other alphabet soup government agencies. Yeah, don't call them.
I saw a headline this morning that insiders, like CEOs, they've sold already $24 billion of stock this year.
Yeah, so absolutely.
There's the transfer coming.
Exactly. And even CNBC did this whole big thing on the hedge funds, selling all of their stuff while the retail investor is gobbling this up. That's exactly what happened in 1928, 1929. That's exactly what happened in 2006. I mean, the formulas, these are not rocket science formulas, but we already knew that we were at a top in August of 2005, right? So it went up until January. And you can't tell anybody, well, we've been trained to buy the dips because the central bank has your back, until it gets too expensive. You know when it gets too expensive, Mario? When the little guys are in there. When it's mostly little guys, then it's too expensive and they will let it crash. And you will be, if that's where your wealth is, you'll be SOL.
All right. Question 11, Richard Garbasic. The last few times gold and silver spiked to all-time highs, prices didn't stay for very long up there. They fell off a cliff, he says. What do you think is going to happen this time?
Oh, I think that until they're ready to actually reset the currency, I think it'll make, again, new highs. But until they are actually, the central banks and governments are actually ready to reset the currency, they will suppress it, because, again, a rising gold price is an indication of a failing currency. And if people actually realized that the dollar was going to zero, I mean, it's not far from it right now. Officially, it's not far from it. But if people actually realize that, then they would make very different choices. But watching the stock market go up, Dogecoin, a joke. You know, there was another new crypto that came out, and within 24 or 48 hours, it was the 10th largest crypto on the market. You know, I mean, come on. This is the retail public that thinks that nothing bad can happen. And really, that's where their wealth will stay. And 1 trillion times zero is still zero. So I don't care what it does nominally. It just creates that nominal confusion.
Yeah, I don't think you would be very well off if you try to time the gold market in Venezuela a few years
No.
ago. You just hold on to gold and silver. So, final question, number 12, and Chris Napolitano asks, because I think you've mentioned the $600 figure, and he wants to know why 600.
Well, the way that I get to any of my numbers, because at the end of the day, I learned this from my uncle so many years ago. All real assets go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation in a constant figure 8. And since gold and silver are monetary, they're both monetary metals, then, if you're trying to get a handle on what their true fundamental value is, well, the first thing you have to do is determine what is the single most, it may perform lots and lots and lots of different things, but what is the single most important thing that this asset or this instrument performs for its creators. For gold, in my opinion, strongly, the single most important thing that it does, though it does many, many things, but it holds your wealth intact over time. Anything can happen short term with all these tools that they've given themselves, but over time, it holds your wealth intact. So it is, you know, if you have fiat money on one side of the coin, you have gold and silver money on the other side of the coin. How you get that is how much fiat money has been created. And in the current circumstance, money is created from debt. So I take all of the debt that's been created, and with both gold and silver, there's a finite amount of it. So I take all the debt. I'm not going to get you to the penny. I'm just going to get you close. And you divide it by all of the gold that exists anywhere in the world. And then you go back to so that'll give you one number. And then you go back to your gold silver ratio. What do you think that's going to end up doing? Going back to the 15 to 1, maybe you think it's 30 to 1, whatever you think it's going to be. And then you just divide that number by that, whatever you think that ratio is going to be, and that gets you to where silver is likely, or close to where silver is likely to be, in terms of fiat dollars, which at that point nobody wants anyway.
Yes, so you'll just work out in the marketplace what people will give you for an ounce of silver, and that's how prices or ratios are evolved from the free market, not from the COMEX. So,
Exactly. Thank you.
So Lynette, I really appreciate the time you've given us to talk with us and answer all these questions, and hopefully we'll see you back again soon. And I also look forward to coming back on your channel as well. Absolutely.
Thank you very much, Mario. It's really been a pleasure being here. Anytime.
It's been a pleasure as well. Lynette, have a great day, and I'll talk to you later.
Absolutely. Bye-bye.